Hello, everyone, and thank you for joining us today for Mission Ready's Corporate Update live event. My name is Dominic Gray, Director of Corporate Communications. With me today are Buck Marshall, President and CEO of Mission Ready, Terry Nixon, Chief Compliance Officer of Mission Ready, Dong Shim, Chief Financial Officer of Mission Ready, and Skip Church, President of Unifier. Mr. Marshall will discuss the progress of Mission Ready, including Q2 financial highlights, milestones achieved, and will provide an overview of upcoming catalysts. Following the presentation, we will proceed to a live Q&A. I want to thank everyone who submitted their questions ahead of time. You will also be able to submit questions through the Q&A function available at the bottom of your screen. To facilitate the flow of the presentation, I ask that you refrain from sending questions during the presentation. A recording of the presentation will also be made available on Mission Ready's website and social media following the call. I would like to remind everyone that this presentation contains forward-looking statements within the meaning of applicable Canadian and U.S. securities legislation. I would ask that you review and be aware of our forward-looking statements. Additional information on forward-looking statements can be found on the second page of our presentation and is also available on Mission Ready's website at MRS Corp as part of our press releases. Mr. Marshall, the floor is yours.
Dom, thank you. Since this presentation will be available for review after the call today, my intent is to move fairly fast through this and a little bit of a higher level because I want to get to your questions as quickly as possible because I think that's where a lot of value will be added. So jumping in today, as Dom mentioned, the presentation will contain forward-looking statements. And we have already, and we'll most likely get additional questions about forward-looking statements. Please be mindful that these represent our expectations, assumptions, or opinions that may or may not be realized in the future. Mission Ready and our subsidiaries strive to be a comprehensive solution to our customers through innovation, manufacturing, distribution, and government contracting channels. Because we cross over different industry classifications, R&D, manufacturing, service provider, etc., it has challenged us in defining who we are. We have spent, Dom, if you want to move forward one slide, please. We've spent tremendous effort in defining our different business verticals while still conveying the one company, one team, one direction mindset. Visually, excuse me, visually we rebranded the company to represent those differences, but retained a connective tissue. We have updated our websites, social media platforms to further support that message. And internally, we have realized resources and added new resources to enhance our revenue generation at each level of our companies. These changes, while they seem insignificant to some, are actually very, very important and monumental to our success. When introducing people to our company, one of the first things they do is an online search. We now have a contemporary platform that helps set the foundation for conversations. We have seen the fruit of those efforts as more and more people reach out to us every single day. We continue to use these platforms to define our capabilities under each company and to market to end users with a more defined and targeted marketing campaign. Dom, do you want to go one more slide? One more, please. Okay, looking at our financial highlights through Q2, I want to mention something here real quick before we actually get into the numbers, as you can read the numbers on the screen for yourself. The story behind the numbers, year to date through Q2, continues our positive trends on the ratios that are important to us, on our liquidity ratios and those type of things. I have received several questions related to the 3-month period covered by Q2, and we'll get to those questions here shortly. But I would like to point out that we expected a drop in revenue and communicated this with our prior outreaches. We also expected the government would have spent money by now, but that hasn't come true yet. We do expect that we will see an increased spending from the government here in the near future. So everything that we've communicated prior and we continue to look at, I think we are very much in control of as it relates here. Now the highlights, if we look at the year to date, which is a little bit more of a stable view than just the 3-month period. Gross revenues of 78.7 million, which is an increase, positive. Increase in our gross profit, that's a positive. Controlling our operating expenses, positive to us. Net income, still fantastic. EBITDA is good. And the working capital position, also very positive. Our cash position is a very fluid number, and we continue to monitor that on a daily basis, but that's a positive as well. Dom, next slide, please. As I mentioned before, in defining and communicating what our companies do to people has been difficult. We have very different audiences of who we're trying to communicate that message to. As investors, you have a motivation and a desire for a certain communication and information. As a customer, there's a different motivation and a different desire for communication. The overall theme of one company, one team, one direction, it has been important to help us delineate between the companies, direct people to the appropriate platform, and better answer those questions. As you can see, we still have our Mission Ready as our parent company. Unifier, what we've done there is to try to create Unifier in two different optics. Unifier is our government contracting side, and then Advanced Tech Rescue, which is our legacy core DNA side. Advanced Tech Rescue focus is on our rescue saws, chains, positive pressure ventilation fans, all those type of things that Unifier was founded on. And those two differences in companies allow the customer and the investor or whoever is looking for information to better understand the difference between those versus just having it all under the Unifier name. And Protect the Forest Manufacturing, still very much focused on our innovation and ballistic combat packages, cut and sew facility that allows us to further define what we can and cannot do in that arena. Dom, you want to go forward one? Share structure, this is updated as of today, or as of the 27th, excuse me. You can see that. I won't go over that. Next one, Dom. The takeaways here. And we're going to further, I think this is where we're going to get into a lot of fun dialogue today in the question and the answer session. But on this slide, this kind of is a snapshot of what we're going to talk about in the story behind what the company has been doing, what we plan to do in the future, and how do we translate that to shareholder value. All the things you see on here with the expansion of revenue streams, the team reorganization, the manufacturing distribution capabilities, all this stuff is designed to build shareholder value. But in order to build shareholder value, we have to have customers. And the focus is on how do we get customers to come to Mission Ready or any one of our subsidiaries to buy our products. And that messaging has been something we worked hard on over the last several months. And we have to improve those sales and margins and sustainable fundamental business practices in order for the shareholder value to increase. I believe we are on that path. We have made great strides on that path, and we will continue to move forward on that path. The shareholder value has, I believe, has already improved, as when I first joined the company. Just prior to that, I believe just prior to that, the shareholder value or the share price was in the single digits. Throughout the first several months of being with the company, we had kind of a glass ceiling at that 20 to 25 cent Canadian mark. And we have blown through that. And we've retracted a little bit. We expected a little bit of a pullback, but we've stabilized in that 30 to 35 cent range here recently. I believe that is a result of kind of a natural shakeout of folks that are in and out of this, and has stabilized due to both retail and institutional investors that see the longer term vision. Dom, do you want to go forward one more? Our market opportunities, there have been some great questions around this, and we're going to get into a little bit more detail on that as we go through the questions. But in general, We had expected, just based off of historical government spending patterns, that we would have seen a little bit more government spending towards the end of Q2 and Q3, and that has slid a little bit. And therefore, our revenues will always lag those government spending patterns. As we approach the end of the government fiscal year, our expectation, like we mentioned, is that the government will spend more money, both through open contracts and ordering vehicles like our GSA schedules and on new contracts. Dom, you want to go forward one more? Okay. Investor considerations. This is difficult because we have such a diverse group of investors with different thoughts of the company, different understanding of the company. As an investor myself, I look at this as a longer term investment. Some folks that are flipping are looking for different information points, data points that will help them. Our internal focus is a long-term sustainable plan. As you can see here, we have a diverse product mix, and that is from manufacturing to innovation to just being a distributor with drop shipping to the end user. We have done a tremendous amount of work to increase our vendor relations, to increase our product offerings, to expand on what is relevant and spend less time on what is not relevant. We have increased our management team. Our management team has actually been in place for a while, but we've increased that support personnel around our management team. We have folks that have been contracting officers, that have been decision makers in different branches of the government. All those people help us to better align our resources to win opportunities. We have, on the financial side, by cleaning up our books and paying off some of the legacy debt, it has reinvigorated conversations with different financial or capital partners, both on the kind of the institutional investor side to the institutional lending side, from banking world, and private investors as well. As we continue to push our R&D capabilities, we look at adding new equipment in our facilities that allow us to become better OEM manufacturers, which ultimately leads to better margins. We are looking at experienced team members in all of our locations that allow us to expand our capabilities. And then on the investor side, I think we've done a lot this year, and we're going to talk about this a little bit more in the questions again. But I think cross-listing to the OTCQB initially, and then uplisting to the OTCQX helps bring brand awareness to the states, and to other people that may not have seen it just through the TSX. Getting our DTC eligibility, recently our blue sky status, which is tremendous, and we will continue to expand that. And then really listening to the market on our branding and investor relations communications. And there's been some great questions about that I'm excited to share with you. And then lastly, our board of directors and our advisory board. Our board of directors have been really engaged recently with promoting us, with introducing us to different contacts in their worlds, and then also bringing us actual true revenue opportunities. Combined with our advisory board, we have a tremendous brand awareness and opportunity to meet people that we are unable to meet normally in this environment. And what I mean by that is with the COVID travel restrictions, and just continued restrictions for in-person meetings, we are not able to go and meet with decision makers face-to-face this last year. Our advisory board, our board of directors, our management team, all those people that have established connective tissue with decision makers currently in the government have been incredibly important to us. Have combined that with our lobbying group that have been able to get us in front of our congressional delegates that either sit on or oversee different committees. All that stuff has been tremendously valuable to us. Dom, do you want to go to the next one, please? The most important thing that if you don't get all the information that we're sharing today is this slide right here, because this is one of the things I'm most proud of, and Dom is a big part of that, as well as Terry Nixon. We have created avenues for shareholders to reach out to us and interact with our management team. So please remember this slide, especially the MRS hyphen IR at mrscorp.com. That email address is your avenue to communicate with management. Please, we are trying to do our best to communicate as much as possible within our authority related to different questions that we get. Sometimes people ask questions that we're just unable to answer. But that phone number and that email address are critical going forward. So Dom, with that, do you want to move forward with the question and answer?
Absolutely. Thank you very much, Buck, for this update. And we'll move to the Q&A part of this presentation. We will first answer the questions that were sent to us prior to the call. The first question comes from Mr. Mark Lawrence. With many insiders purchasing shares over the last year, the stock price has since dropped significantly due to lack of volume in news. I would primarily assume that this is mainly due to the lack of promising revenue streams. Can you please provide any insight into the contracts the company has been bidding on and why we haven't been getting them? Or if we have not been bidding on any, why is that?
Well, Mark, thank you for your questions. Insiders have purchased in the past year, as I believe they firmly believe in the company's potential. That's why I've purchased what I've done. Q2 financials have once again showcased our ability to improve our ratios, manage our expenses, decrease our expenses, and bring in additional revenues that ultimately resulted in better cash and overall financial strength. Mission Ready's revenue streams, such as our GSA schedules that I mentioned, our innovation, our manufacturing and distribution capabilities, all combine to bring consistent revenues that form the core of our business. I've mentioned before that our orders are the bread and butter, the day-to-day activities that cover our operating expenses, and the big contracts are just icing on the cake. Both are very important to what we do. With regards to contracts, Mission Ready has been and continues to actively bid on contracts, and the process is ongoing. Mark, with all respect, I'd like to make a slight correction to your question. You asked why we haven't been getting contracts or getting them, which is a common question or variation of that question I've seen a lot. I want to clarify and state that the lack of contract announcements is not due to winning contracts or losing contracts. It is due to the government not awarding them yet. We are still very much in the competition. We are very much in the fight for each contract that we have submitted. I mentioned prior that I thought the government would have spent money, or loosely translated, I thought that they would have awarded contracts prior to the end of Q2 and throughout the rest of the fiscal year, which made sense given the historical nature of the government spending patterns. Unfortunately, my logical thinking and the reality have not fully aligned. This does not diminish the logic that the government should still spend a significant amount of money and or award contracts prior to the end of their fiscal year. Now to the second part here, to answer the question about providing more detail on what contracts we have submitted or are planning on submitting, my hope is that you will understand that by providing additional information or additional insight into contracts that we have or are bidding on would represent selective disclosure. In addition, as part of the contract and bidding process, providing more detail would present a problem from a competitive standpoint. Part of our competitive advantage is our vendor network and pricing, and potentially knowing about deals that others may or may not know about. Making public the contracts we are working on, obtaining or bidding on, or even researching and responding to as an RFI would open the door for competitors on those same contracts that may or may not have seen them. I think this kind of answers your other question you submitted to request further information on contracts relating to PPE.
Thank you, Buck. The next question is, finally, one non-financial issue I do have with the company is that there have been many posts by the company that have typos. I do not see a company of this size should be consistently having to delete and retweet after realizing the mistakes.
Well, I agree, and I will own this personally, as I pushed our social media to go live before we had all of our pieces in place. We use a technology platform that was new to us, which allowed us to plan out an automated post on different social media platforms ahead of time. There was a misunderstanding of how or when to use hashtags versus cash tags. And this led to several posts that in the beginning that had spelling errors that were corrected after the fact. We were slow to understand how to edit posts in the system, in the technology app that we were using prior to being published. But as many things, we learned quickly, we moved forward, we corrected them. And part of that solution was the gentleman you hear on the other side of the questions here, and that is Dominic Gray. The company recently hired Dom as Director of Corporate Communications, I don't know, a couple months ago. And Dom's responsibility is to be taking over completely Mission Ready and all of the subsidiary social media accounts. And he's been worked hard the last few months on consolidating the accounts, creating new social media strategy, and all those things that go into that behind the scenes, a lot of which, to be completely transparent, I'm unaware of. Dom does a great job of anticipating and getting those things published, and I'm so grateful for him. As a company, we strongly believe that Dom will be able to deliver the quality content that will also kind of correct the initial situation of spelling errors and stuff. His attention to and focus on detail has been evidenced in the recent communications published by Mission Ready and Unifier.
Thank you. The next questions come from Mr. Russell Inter. My question is, given that we manufacture and or distribute over 1.5 million military, fire, and first responder products, why are we not selling anything? My assumption is that we are actually making other smaller sales, but this is only an assumption since, unless I missed something, MRS has not actually given any solid information regarding any other business. If we are making other smaller dollar value contracts, is there a reason why investors cannot be informed on a monthly basis as to the accumulated value of these contracts?
Well, first, Russell, thank you for your questions. We are indeed selling product as evidenced by our recent filed financial statements. While we can appreciate the need for investors to be updated, Mission Ready provides updates regularly and in our compliance with disclosure policies established by security commissions. And Terry, I'm going to ask you to be mindful and ready to jump in case I misstate this. But while we do not disclose those sales monthly, they are reported as part of our quarterly financial information. And in the case with all material information, a selective release of earning forecasts or other financial forecasts may not be made except as permitted pursuant to security laws. And Terry, this is where I need you to double check me, including those set out in the National Policy 51-201 and parts 4A and 4B of the National Instrument 51-102.
Yeah, Buck, I'll quickly jump in. You're absolutely right about that. Now, the key to that is the selective disclosure aspect. So it's not that we couldn't report when there's certain sales and things like that and provide these monthly updates. But for a few reasons, it can be problematic, including, as you previously mentioned, Buck, the competitive aspect of things. We certainly have to have a level of ensuring that certain information that maybe the investors want to hear that's non-material and non-public doesn't get out just for the sake of ensuring that we've always got something to put out, because there are reasons that we don't want our competitors necessarily to have this information. Secondly, when we talk about selective disclosure, of course, that's when you're putting something out that's not made publicly available or generally accessible to the investing public. And so, there's certainly times when we try to provide an overall update on the company. We're going to get some people saying, well, that's just fluff. We want more than that. And then when we don't do that, it's the concern is that, well, are they not telling us things? But we can assure you that anytime there's material public information, that it goes out in a timely manner. And when there's information that maybe wouldn't necessarily be material pursuant to securities laws, but still something that the investing public would find valuable, that we try and do our best to get that out by way of social media, a newsletter, anything like that. And we're going to continue to ramp up those efforts as best we can.
Thank you, Terry.
Thank you, Terry. Thank you, Buck. The next questions come from Greg Wozniak. What sales initiatives is the company working on outside the US government, and why has nothing materialized in regards to this? Why is FlexLine and No Contact not selling? Please explain why these products are still part of PTF when nothing has been sold in years.
Well, Greg, I think these are some great questions, as it speaks in part to our forward-looking initiatives. First, I think contrary to the belief that we have hundreds of folks on staff, we simply don't. So it's very important for us to focus both our limited financial and human capital to capture those opportunities that provide the best ROI. Right now, that is on the core competencies of the company as it relates to manufacturing and US government contracts. We recognize that foreign military sales, or FMS, and general products to foreign governments is an avenue for future growth, but we are strategic about it right now. We do have and have developed relationships with business partners that are experts in the FMS world, and we are actively working to support their efforts by providing solutions to them when they present them to us. We allow them to be the experts and do what they do, and we do what we do for now. That opportunity for us to expand those outreaches and stuff will be there in the future when we are ready. I just don't want to take the focus off of what we do currently to make money. Additionally, we did start the process of obtaining a medical device establishment license in Canada, which would allow us to provide solutions around the PPE world, or PPE solutions that we've been providing to the US government. These types of activities, I believe, will set the foundation for future growth potential, but we just haven't been able to fully recognize them yet. I think the most efficient avenue for us to kind of keep one leg in both sandboxes here of future opportunities plus our core competency is to use technology to generate sales outside of where our staff can focus on in their time. While we have realigned our human capital under Skip Church to focus on those immediate needs, we have concurrently been pushing our technology initiatives to bolster sales. As part of it, our initiatives, Mission Ready and Dom specifically, have been actively marketing our products, our vendors, and our capabilities. As we talked about before, we are trying to use different communication platforms or vehicles to really delineate between what message needs to go to shareholders or what message needs to go towards customers. Social media has been a great example or a great platform for us, but unfortunately has led to some shareholders to interact negatively with the company. And I want to clarify that while Unifier is Mission Ready's wholly owned subsidiary, Unifier social media's main goal is to provide visibility to Unifier, including our sales initiatives, our marketing, to bring awareness to products, capabilities, vendors, and all those type of things. As a result, we will continue to use the Unifier platform to promote in a format that will increase our visibility to those dedicated customers or to those dedicated campaign as it relates to those customers. The part about your question regarding the Flex 9 and no contact, I believe we were a little bit ahead of our time with these products. PTF Manufacturing still owns the intellectual property for Flex 9 and the no contact, and the goal is to continue to have these products as part of our offering. We're not going to get rid of them. The U.S. government recently, well, not recently, I guess midsummer, put out a request for information or an RFI for a ballistic combat shirt, which is perfect for our Flex 9 armor. We responded to that RFI, but as the theme has continued this year, that RFI has not yet turned into a request for quote. Therefore, we can't actually bid on it and the government can't award it yet. We do believe that that will come in the near future, as that product is in that RFI is something that could be very potentially beneficial to our warfighter. The no contact technology, I believe this technology was ahead of its time again, but now given our current environment, will gain more traction. I think the issue here is less with the solution and more to do with budgetary constraints. Police forces at every level around the nation, potentially around the world, could use this technology to protect those that protect us, while still engaging with the community and de-escalating different triggering events. However, with the vocal minority calling for defunding the police, budget restrictions, budget reductions, versus actually increasing budgets for new training and technology that would better serve their goal, it just simply hasn't been in existing budgets at the police level, at the local or state level, to purchase our no contact technology. I do believe that some of our future efforts will lead to language that will make better available funding for these types of technologies, the non-lethal, less than lethal technologies, and we have a seat at the big table in those conversations. And I do believe that and expect that Unifier and Mission Ready will eventually be able to convert the incredible technology we have into revenue.
Thank you, Buck. Management within the company has stated that they believe the company is undervalued. If that is the case, why has the company remained silent with their ads at the brand? Should they not be promoting the business to investors and creating interest? The volume is laughable, and it's apparent that no one knows about the company, or they don't see the need to invest. How will this change?
Yeah, and I understand the frustration here, but I think this question misses the mark a little bit. Management has been extremely active in creating interest and improving value for the shareholders. As mentioned, the addition of Dom to the team has been a big step in the right direction as far as promoting within that space. Dom has since then started to bring awareness to the company, of the company and its subsidiaries, to both retail and institutional investors. This has been, I think, reflected well recently by the increased reach of our press releases, our growing social media following, our expanding coverage. All those type of things have really been, while not seem like they're moving the needle very quickly, they have been foundationally critical to what we are doing as far as bringing value and focus of our awareness about the company to those individuals. Additionally, I believe Mission Ready has been active in its outreach to institutional investors, as we've had conversations with some of those folks and began to really promote the new look and feel of the company, the new direction in our vision, and the potential of the company. And I think we've had some great response to that. We will remain focused on our outreach. I think additionally, as we've mentioned briefly before, the blue sky status allows a greater focus and visibility to our U.S. brokers to present Mission Ready to their retail investors as well.
Buck, if I may just quickly jump in here, if you don't mind. Certainly understand the thoughts about the share price and things like that. And as you know, shareholders ourselves with fairly substantial positions, it's something that we'd love to see shareholder value. As we jumped up to $1, we wanted to, of course, see it go north of that as well. But what I would say is that we certainly want to have the foundation of and the history behind us showing that we've got we're prepared for continued growth and to be able to leverage all of our resources as best we can and ensure that nothing's going to waste. And so that's what we've been doing, is building that foundation. And as the share price fluctuates between now and the time that we really start to see that foundation being the basis for our future success, it's going to ebb and flow, and we understand that. And what I wanted to say about the volume was that we are actually one of the higher volume stocks on the TSX Venture Exchange. In 2018, we traded 106 million shares in Canada, 153 million in 2019, 259 million in 2020. That's a staggering number. And, of course, we're only partway through 2021. But again, very, very high volumes compared to the majority of TSX Venture companies. So what that shows is that there's a lot of investors watching us. Granted, we want to certainly have more outreach to the institutions and things like that, but there's a lot of retail investors like yourselves who have supported us and continue to support us, and we sure appreciate all of the help along the way. And just want to point out that our volume is not lacking, but perhaps the volume in the right places is, and that's something that we're keenly focused on.
Thank you, Terry.
Thank you, Terry. Where does the company see itself in 1 year, and what, in your opinion, will take this to the next level? And I think that was partially included in Terry's answer.
Yeah, and just to expand on that a little bit, I think the path we're on is the correct path. We'll continue on this path, focus on what we can control, and continue to look for ways to increase margins, not just sales, but in margins, which is critical. We are shifting from, I think, being a reactive company to opportunities, and we are focusing more on being proactive in creating opportunities for ourselves. We have and will continue to look at force multipliers, consultants, business partners, those type of things that will also be out there looking for opportunities for us. I think our addition of our members on the advisory board is a critical step in that direction. And as I mentioned before, the board of directors helping to drive their connections and their opportunities that they have connected tissue with to our company. All those things will help us continue to grow, and will, I don't know exactly how it will manifest in the next year. It might be, I think it'll be a longer term play than just 1 year, but we will definitely see the fruits of all those efforts come to bear in the next 12 months or so.
Thank you. How does the company plan to obtain consistent and stable revenue generation? Why is there so much reliance on government contracts? The company has been shut out by the government before. Is that a concern again going forward?
Yeah, well, I think, as we mentioned, by building upon technology, enhancing the revenue vehicles that require less human capital, but provide maybe smaller, more consistent orders, will help stabilize our growth. When we can create an annuity of income that covers and maybe adds a positive return to our overhead, that in turn will allow us to invest time and money into larger contracts, more people, more opportunities that will really move the needle in a singular, more significant way. But I think that the key structure is having an annuity that covers our base needs, and then really kind of allows us to play and not be so reliant on larger government contracts. I'm not sure I totally follow being shut out by the government, but if you're referring to the SOE TLS contract, then I say that was really a blessing. As an SOE prime vendor, the margins were incredibly low, and the resource demand on us was incredibly high. We had to be a part of that, we needed to have access to capital at a much better rate than what we did. The human capital in responding to RFQs on a daily basis was draining us and taking away focus on other opportunities that we could be making better money at. So I think those things are really a blessing to us. Otherwise, I believe that we are very much entrenched with the US government's procurement process, as well as state and local. Sometimes I get a little lazy with my words and just kind of refer to stuff as federal government, but it also includes state and local government. The concern, I think, is less to do with being shut out, as I don't view that as a concern. But it does make the budgeting process more difficult when we rely on the government's timing and their discretion at awarding contracts. But I really think that the diversity in our orders versus contract game plan is really what will help stabilize revenue generation for us.
Thank you. This question relates as well to a question that was asked live to us. Investors want to be rewarded. Most of us have been here for 5 years. Please tell us why we should remain invested in the company.
Well, I think as you suggest, since coming on board, we have worked on a consistent and stable revenue generation game plan, expanding our revenue streams in order to avoid undue reliance on government contracts when we don't need to. We continue to build our GSA schedules and our pricing. We are in the middle of and have worked very hard on updating our pricing to improve those margins and generate better sales. We have reorganized our operations, reducing our operating expenses. We have increased our gross margins for the most part. As part of the expansion of our revenue streams with SCIP, now at the helm of PTF, we are also maximizing our capabilities under our cut and sew abilities or capabilities. This includes OEM manufacturing that, quite frankly, offers better returns than some of the stuff we're doing in-house for ourselves. And while I can appreciate the desire for shareholders to be rewarded, as Terry mentioned, as I mentioned, we are also shareholders and we want to be rewarded as well. I believe Mission Ready is a long-term investment. The vision has always been long-term to build long-term shareholder value. Mission Ready is poised for success as we sit today. I think with our incredible team of experts, both on the operational support side, the management side, the advisory board, and the board of directors, I think you've seen the confidence in the company through that. Insiders have spent their own money, putting their money where their mouth is, and associating their name and their reputations with the company. All these elements, I believe, show a deep belief in the story and the team's capability to provide value. I think from an investor standpoint, our financial situation and our share structure alone should be evidence of the value of this company. The share structure is clean as it can be. Mission Ready has a clear runway for its next new contract news. I think that when we announce contract awards in the future, it'll have an exponentially bigger impact on the share price than historically, just because of the infrastructure and foundation that we have worked so hard to put in place over the last several months. And the fact that we're able to retire so much legacy debt that has been an anchor on the company. Any profits going forward, excuse me, any profits earned going forward can really be invested back into the company versus kind of paying off that anchoring debt.
Thank you. The next questions come from Nick Lewin. I'm sorry if I misspelled the name. Some details on Canadian initiatives would be appreciated. The Canadian government and military needs PPE and other items that MRS could and should be supplying. Why does MRS appear to be achieving so little in these areas?
Well, yeah, Nick, I think that we touched on this a little bit prior. We are looking at Canadian opportunities as well as other governmental needs around the world. but that process is slow as we navigate through the requirements, especially in Canada. The MEDL or MDEL licensing process has been a little bit cumbersome for us. And then combined with our limited resources, it is slow. And it will be slow for the near future until we can secure more capital to finance those opportunities.
Thank you. Why the lengthy wait for quarterly report? Is there any reason that there could not be that these could not be provided within 4 to 6 weeks after the end of the quarter?
Yeah, well, Security Commission allow us 60 days for the filing of our quarterly financial statements for venture issuers. Non-venture issuers have 45 days, I believe, to publish their quarterly financial information. The main consideration is the time and resources allocated to release of that information. In our case, this involves collecting the information from all the subsidiaries, then compiling them. It is a transformation from US GAAP to Canadian IFRS. It is a currency conversion. It also involves subsequent information that is not immediately provided at quarter end, but for a period covered by the quarter. Example might be like a credit card statement where it's a little bit lagging on the information versus what has really happened. Once that information is compiled, the financials then need to go through our internal review. We have an audit committee that needs to review that and understand them. And then we present that to the board for final sign off and filing. It really is more of a resource intensive process than what is expected and what some people expect from us. But it's really important for us to do the right things and to get the information correct versus being first in releasing it.
Thank you. The next questions come from Richard Noel. How do you explain the prices of the products sold higher than the income of the products sold?
Yeah, so now this is a fun question because this gets into the financial side of things where I really enjoy talking about. You're referring to the cost of goods sold versus revenue, which can be a little bit deceiving as we are allowed to include things in cost of goods sold under accounting privileges that extend beyond just the pure cost of an item. This includes some indirect costs like attorney fees or consulting fees, those indirect fees that are related directly to the products or services sold, but are not necessarily the true cost of the product. In doing this, we capture, from a management perspective, in doing this, we capture the truer cost of each contract or product or service we provide. So as a management team, we can look for future efficiencies and include these either in our cost as we bid or in ways that we can reduce cost. To me, this refers back to the management basics. If you can't manage, you can't manage it if you can't measure it. So as we spoke earlier in the year about KPIs and our accounting software and all that stuff that we put in place to that robust tool, these are all things that allow us to better manage the company. Specifically, in this quarter, we recognize some invoices received and paid that were not directly related to revenues generated in this quarter alone. We recognize some revenue in quarter one, which we hadn't been billed yet for. And so we recognize the expense on some revenues in quarter one. The expense side came in quarter two. All these things kind of combine to inflate the cost of good number. And I think through the spirit of your question, we are not selling product for less money than we make on it. It's more of an accounting function. And why I believe that looking at quarter numbers alone can provide some value and insight into that 3-month period. I impress upon you that it is very important that we always look at the full year to date as well. And if you look at the year to date numbers, you'll see that the revenues and COGS fall in line with what we expect. Dong, I'll open it up if you want to add any more to that.
No, I think that covers it all.
Okay.
Perfect. Thank you. Can you tell me the strong and the weak points of Q2 compared to Q1?
Yeah, I think we've covered this in a lot of detail in our financial releases and management discussions. But just to summarize the strong points again, we've focused on what we can control, mainly expenses, which have been trending the right way. The weak points is really revenues, which we expected to drop in Q2 and in Q3, as contracts with big dollar amounts attached to them will always lag compared to the very strict cutoff time of each quarter. I don't think we are, as a team, I'm not concerned with this and this lag, as we manage our cash flow appropriately, and we prepare ourselves to weather the slow times, while putting the company in the best position to take maximize opportunities going forward. And I really believe that while the quarterly financials may lag a little bit, we're in a really good position looking forward to a very fun, exciting, and very, very busy end of the government fiscal year, and for both the government and for us over the next few months.
So the next question is about the gown contracts. Can you provide us more information about the contracts? Was there any issue with the gown contracts?
The gown contracts that we recently announced, the DLA clothing textile gown contracts, we've had no issue with. We have completed that contract. We have fulfilled our obligations to our vendors, to our manufacturers, and to the government. And while we had hoped, and I think this goes back to expected revenues and in prior statements, that contract to have more delivery orders during the last year, it just didn't materialize. But I believe that our performance on this DLA C&T contract has positioned the company very, very well inside of the government for future revenues related to gowns. As we've seen reported, the national stockpile supply, the target is in that 268 million unit range, and they currently are, it fluctuates depending on the report, but they're in that low double-digit million unit range, like in that $15 to $20 million unit range. So there's a lot of room for us there. There's a lot of concern with that as the Delta variant continues to increase and COVID restriction mandates and stuff come back. So I think that we are positioned well for future gown contracts. We expect that we will see some new, as the previous contract winds to an end here, we expect to see in the near future here more RFQs for gown contracts going forward. And I do believe that we are positioned very well for that.
Thank you. The next question is, what made the gross margin negative? We've already answered that one, but what is the company doing to bring us back to profitability?
Yeah, so I think that the explanation of the cost of goods will answer that. We are profitable already, but just future looking, we're going to look at, it's not always sales that drive the company, it's margins. So we continue to look at the margins of what we are offering, where we can gain a little bit here and there, always helps. The other side of that equation is always expenses. So we are managing our expenses and running as lean as possible, but that's what we're doing.
We'll go to a question from Johan. With the cash in hand at the moment, would there be an opportunity for the company to buy back shares at these low prices?
Well, I think if the company is not considering a buyback of its shares at the moment, maybe this is something we'll consider and contemplate down the line. But at this moment, we are not. I don't believe we're in a position to do that at this moment.
Perfect. Thank you. Another question that came live. Are there any plans on uplisting to TSX main board?
Terry, as our compliance Guru, do you want to take that one?
Absolutely. At this time, there's no plans to uplist to the TSX main board as far as anything imminent. Certainly, that's something that we see could be of great value to the company. Our primary focus at the moment is of course growing the operations of the company and whatnot. We believe that we've got the liquidity and the capital required to continue along the track that we're on right now, without necessarily needing to jump up to an exchange that would give us the ability to raise additional funds. But that being said, we don't want to minimize the value of that. A lot of our recently on the security side of things have been to gain exposure on the US side, whether we, eventually the board, decides that we'd like to uplist in Canada or seek a graduated listing in the US is something that we're not prepared at this point to disclose. Though we, it's something that is on the top of our list to see how that could be accretive to shareholder value. And it's not something that's a new concept to us. We've discussed it many times in the past. And just going back to the previous question about a share buyback, if there was the capital there that wouldn't take away from our ability to grow the company and really get this foundation that we keep talking about, I think that the opportunity right now with the current share price would be ripe for us to do a share buyback and would be accretive to shareholder value. So it's something that I would love to see happen, but not at the expense of losing opportunities that we have on the operational side of the company and to grow both the top line, but more importantly, the bottom line.
Thank you very much, Terry. We're shortly running out of time. We're getting closer to 1 o'clock at this point, and there are still many questions left unanswered. So what we would like to do is conclude the call at this point, and we will take the questions that are left and we will answer them individually with your registration information. I'd like to thank everybody present today, the participants and the panelists. Thank you to Merit Management team for this call today, and thank you shareholders and investor. A recording of the presentation will be made available online at MRS Corp. And should you have any additional questions, do not hesitate to reach out to us at the address that appears on screen right now, and we will be happy to provide you with more information. Thank you all today.
Thank you, Dom. Thank you all.
Thank you.